But for now, let's do one thing. Let us invite the first guest on Trading Hour today. We are joined by Rohit Srivastava, who is the founder and strategist at Indiacharts.com to discuss everything about the markets and technicals as well. Rohit, good morning. Thanks a lot for joining us. Well, you're joining us from Europe, I believe, and you're on a vacation. So I just wanted to understand first. By the way, that's quite a holiday look that you're in. So looking great. But
he's celebrating his 50th birthday in Switzerland.
So. Okay,
that's quite a way to celebrate. But I don't know, maybe joining CNBC-TV18 on the 50th birthday.
So we are the ones who are benefiting from his 50th birthday in Switzerland for sure. But Rohit, wishing you a very happy birthday from the entire team.
Shouldn't have revealed the age.
Yes, I think so.
Rohit, sorry about that. I meant 30, not 50.
Okay. So hope you're having a great holiday, and while you're doing that, you joined us here to discuss market technicals and a lot more. So thank you for that. Just wanted to understand whatever is happening in the global markets. You are in the heart of Europe as well. We saw a lot of action that's happening out there. What is the outlook for Indian markets as per you?
Yeah, thanks for having me. It's like 7 a.m. Here, so huge time difference. But what I'm seeing really, we are getting one of the first small bounces, a lot to do with news around UK. But I'm not sure this will be a tradable rally yet. If I purely look at the Nifty, which is the core question, we have seen what's been like a falling knife for quite a while. If we do bounce up, I think 100, 200 points or 300 max may be the case. I think there'll be one more round of selling, which might finally hit somewhere between 16,800, 16,700, which is close to the weekly averages, which are the 20, 40 week averages are clustered around that range. And I think that's where you probably get the first tradable bounce, which Prashant, you were just talking about. So I don't think we are there yet for a tradable bounce. Though, if I simply look at US markets, the dollar bond and all their sentiment indicators, which is we follow something known as the daily sentiment index, which is a global survey, and that has actually hit single digits, like only 5% or 7% people being bullish on a couple of those indices, which sort of creates a place where you start hoping for a bounce back that is more meaningful. But we are still not getting it. So this is what happens, that when you get into a severe part of a bear market, oversold readings do not work. And therefore, judging that you're past that point simply on a one-day bounce is tough. But we may be getting there, but I think not yet. So putting that in perspective, I think Indian market specifically will have one more round of selling after a small bounce before we get a tradable rally, which we can actually sit on for a couple of days. So that should be probably by sometime next week.
We'll have one more sell-off. The way you put it, Rohit, that's the last one? That will be the last one?
For this particular structure, so I have been calling this a bear market since last year, which means since October of last year, we're saying this is a bear market, or even if we take it from April. And typically, bear markets in India last for around 18 to 21 months or so. And so if I take that from the October high, it takes us somewhere to March 2023. So that's sort of putting a timeline. What we are looking for in this fall, and why I'm saying one more sell-off, is, from a pure technical perspective, we look for something known as a 5-wave decline. What that does is it gives us structure and comfort in being able to make forecasts going forward. So far, this fall from the high that we made close to 18,100 is 3 waves. This is the third wave going on. This bounce we are seeing today, maybe a fourth, and then we get a fifth, which is what I'm saying is the final sell-off. Then we get a tradable rally. But that tradable rally might still be a bear market rally. It may retrace 50-60% of the sell-off. And then we could be due for another round of selling. That is what we are thinking. And so we are not completely saying that this correction would end at 16,800, 700. It would be one leg of the decline that we have started that will complete there. But it won't be the end of the bear market.
And what sectors are you particularly bullish on, and which are the ones to avoid?
So my sense, if you really study the last 8 to 9 months, is that we have seen each of the sectors in the market top out one at a time. If you look at the small cap index, it made its peak and along with IT in January. The metals, oil and gas made their peaks in April. We've seen the auto, power, and I think energy-related companies hit on capital goods. These indices hit new highs in the last rally into August. And so I think each of these sectors are sort of peeking through. My main point is that this might be a phase where almost everything goes down. So the only way, if we say that certain sectors are strong, it will simply be relative performance. Okay, can something fall less? The two sectors that come to mind, which have also been strong recently, one is defense. For some reason, that's been getting more order flows and interest. And so maybe that's one area where interest will remain, so the correction could be smaller. The other one, which has been in decline for longer than most, and which was one of the peak performers of the post-COVID initial rally, is the pharma sector, which has been really down. So if there may be some hope that as a bear market grinds along, pharma stocks get a bid as money moves, from some sectors to defense. And so I'm not even looking at FMCG. I think between FMCG and pharma, I would probably prefer pharma as a defense. So these, I think, would be two sectors of interest on any decline.
Okay, so pharma is one of the preferred sectors as per you. What about IT, Rohit? Because that particular sector has been under a lot of pressure. Last couple of days there was some buying, but do you think there will be some stable signs we'll see for this one?
I seriously doubt it. See, IT and exporting sectors are likely to take the pain from what is happening around the world, and specifically US. So because most of the business comes from US and Europe, and US is clearly so far no change in its stance and path, which means earnings will continue to decline over the next 6 to 9 months based on the forecast that I'm reading. And if that is true, it has the most direct impact on the IT sector. And the IT sector also tends to correlate a lot with the NASDAQ. So I doubt you'll get anything meaningful there till you get a meaningful reversal in US equities.
By the way, Rohit, how's shopping going? What's the franc rupee rate? Has it done? Has it moved in your favor or against you?
Well, not much of a move since I came here. I think most of the move happened before the Fed stepped in. So it's fine. I think. See, costs. I mean, Switzerland is an expensive place.
Yeah.
If I simply have to put it at that, so that doesn't really change. But it's been raining here, so not really been able to check on shopping.
That's why you're talking to us, huh? Stuck in a hotel room.
Woken up at 7 on a holiday. That's something.
No, that's no. I mean, so come back and do the shopping. We need the shopping here, Rohit. Just a bit of global markets, though, right? I mean, what happened yesterday? I don't know if you were watching. You were traveling, so maybe not that closely. It felt markets are starting to feel, especially bond markets, because of UK, very fragile, very large moves, which are not supposed to happen. They happen very rarely, and because they are so rare and they are so large, the tendency is to say, well, it's all coming undone, and what's happening in UK next will happen somewhere else, and it's that the tendency to leap to that kind of conclusion is there. How would you describe what you've seen over the last couple of days, especially in the UK?
So my first thought on UK is that we've already seen, for example, Japan stick to its policy of keeping rates low and not really moving anything. We saw Europe do it for a pretty long time. They didn't really want to raise rates, and even as they're raising rates, they do have a bond buying program in the background to keep liquidity high. So they really don't want liquidity to tighten up. This is sort of what I think even China to some extent has done. They've started cutting rates. The UK is suddenly backing off from what they want to do. How does it really help the dollar situation? That is the mute question. I mean, you can look at it that the large part of the dollar's rise is the weakness of the other currencies. And if the dollar remains relatively strong to other currencies, and the dollar is the main borrowing currency for the world, you have external debt outside the US of almost $13 trillion outstanding, then it really hurts other parts of the world. So how does the pounds, attempt to weaken? Because finally, that's what they end up doing. If they end up buying bonds, they actually weakening their currency further. How does that really help the situation apart from stabilizing the bond market in terms of the value of the currency? So I'm a little confused there. And so we would only end up thinking that the dollar bull market remains strong. Apart from a short-term pullback in the dollar, you probably see it strengthen again, which will probably not go down with various asset classes over time. And that's, I think, the end result of the thought process.
Okay, everything weakening elsewhere, strengthen the dollar. Just one last question briefly, Rohit. What's your forecast for the dollar rupee from here?
So I'm looking at 85, 87 as the initial move in this current swing that we are really seeing. I think we'll probably see it stop somewhere there and pause. It may not be the final high, but right now in this current move, going to 85 to 87.
All right, take your point, Rohit. Thank you so much for joining in, and once again wish you a very happy birthday from all of us here at CNBC TV18. We take a short break, come back, we discuss what's buzzing in the commodity space. Manisha Gupta joins in.